The J. Paul Getty Story and 7 Essential Money Management Rules. The story. J. Paul Getty, an American businessman and once the world's richest man, once invited 3 guests to dinner at a luxury restaurant. Upon arrival, he suggested they take a walk before going in. When a friend remarked that he was very hungry, Getty replied, "Let's take a walk. It's not yet 10 p.m. Here, they charge 10 shillings per person before 10 p.m. I don't want to spend an extra pound for 15 minutes. This was the mindset of one of the richest men in the world. The lesson. Today, everyone wants to know how to earn money, but perhaps only 1 in 100,000 knows how to spend it wisely. If you don't know how to spend, then learning 1,000 ways to earn will be futile. If your bucket has holes at the bottom, no matter how much water you pour in, it will never fill. In this video, we'll explore how to spend wisely, when and how to take good debt, which bad habits to drop to become a crorepati, what income level is appropriate for buying a car, and on what things you should never hesitate to spend. Let's discuss these small but crucial aspects of money management. 7 money management hacks. 1. Weigh your expenses. Always remember, we become rich or poor not because of our earnings, but because of our spending habits. Here's a great way to evaluate any purchase. If you earn $50,000 a month and work 8 hours a day for 26 days, approx. 200 hours a month, your hourly earning is $250. Before buying something worth $5,000, ask yourself, did I work 20 hard hours for this? If the item isn't worth those 20 hours of effort, don't buy it. R. Smart shopping. Middle-class families often make the mistake of going shopping without a plan. Never go to the market without a shopping list. This ensures you only buy what you need and avoid impulse purchases. Shop alone, as going with family often leads to unnecessary items. Set a time limit for shopping. Less time means less unnecessary spending. Avoid shopping on an empty stomach, and if possible, shop around the 25th of the month, when funds are lower, rather than the 1st, when money feels abundant. 3. Never compromise on health, education, and food. Even if you have crores, poor spending habits can lead to bankruptcy. Some people who can afford private jets still travel economy class. Remember, never cut costs on health, education, or nutritious food. Saving on these will cost you more in the future. Also, avoid buying unnecessary items just because they're on sale. It's not saving, it's wasteful spending. 4. Tax planning. Tax is often life's biggest expense. Consult a CA to legally save tax through proper planning, not evasion. The easiest and most important step is buying insurance. Anyone whose income supports a family must have insurance, but opt for term insurance, not money-back policies. Term insurance gives pure coverage at a low premium, for example, 473 months for 1 crore cover, while money-back mixes insurance with investment and charges 10 to 20 times more. Keep investment and insurance separate. Ensure your coverage is at least 10 times your annual income. 5. The car buying rule. Many people buy cars and become poorer. Follow the 10th of April 20 rule. 20%. Pay at least 20% as down payment. 4 years. Finance for no more than 4 years, even if lenders offer 7 years. 10%. Your monthly EMI should not exceed 10% of your monthly income. Also, your car's price should not exceed 50% of your annual income. If you earn 20 lakh per year, don't buy a car above 10 lakh. 6. One bad habit can make you a crorepati. If you smoke a 100 cigarette daily, you spend 40,000 a year on smoking. If you instead invest 40,000 annually at a 10% compound return, in 40 years you'll have over 2.14 crore. Quitting a bad habit not only improves health, but can make you wealthy. 7. The debt rule. Debt can be good or bad. The rich save today's money for tomorrow, while the poor spend tomorrow's money today. Avoid credit card debt, it's the worst. Never buy on credit what you can't afford in cash. Good debt is for assets that appreciate or generate income. For example, a home loan for a property that gives rental income. Bad debt is for depreciating items or show off. For example, loans for weddings, vacations, or luxury cars. Never pay interest for things that lose value over time. Bonus, stop showing off. As Will Rogers said, many spend money on things they don't want to impress people they don't even like. Humans have an innate desire to show off their body, car, house, success. The moment money arrives, the desire to upgrade lifestyle kicks in. Remember, rich people don't need to prove they're rich. Poor people often spend their lives trying to prove they are. Never buy anything just to impress others. If you suddenly receive a windfall, for example, from selling land or shares, don't rush to buy a Scorpio. Park the money in an FD for 3 to 4 months and avoid looking at it. In 95% of cases, sudden money vanishes within 3 years, leaving people worse off. Conclusion? Follow these 7 rules to manage your money wisely. Please comment below which rule you liked the most. If you found this helpful, share the video and subscribe for more. Take care of your money, and it will take care of you. Until next time, thank you so much.